Hello friends, welcome to my channel and thanks for watching my video. So welcome to another session of USA Weekly Market Report series, and it is quite evident that market is in a risk-on mode just before the president-elect is about to join his office, and obviously the market is taking a bow and positivities are all around. Now, what we are going to do, we will check out this momentum, the fresh momentum which we have seen, and is this a real deal or is it a hogwash? That is something which we are going to discuss because market closed in deep green is a very positive sign as. There is an official holiday on Monday, so this is an extended 3 days weekend. And meanwhile, you have USA have his new president, not a president elect, but official president. So it will have a huge impact on the market from Tuesday's trading session, and maybe some big changes not only on the economic level but also on the global levels are coming that we will get to know, but let us keep ourselves within the market only. So let's start analyzing the chart. So this is the price chart of Dow Jones, and you can clearly see a big reversal or big spike which we have seen, and the official close for the week is obviously in a positive note. And if you're looking at the price chart of Dow Jones, we have a kind of price breakout. Here we are. So we have a big downside and it was a fast one, but now the market is in a recovery mode and Dow Jones went up quite sharply. And we also have a price breakout that has freshly happened above 43,396. So 43,396 will be our support, and we have 43,240 on the downside as far as the stop loss is concerned, as far as the current range which you are looking at. So don't go below these two lines. And similarly, what you can look for as far as the upcoming week is concerned, obviously it will be a 4 day week, not a 5 day trading session. So what we're gonna look at are these two targets for the upside. If the Dow Jones continue to trade and sustain above 43,396, then we have 44,520 and 45,100. So these two targets are officially active for the time being. So this is a positive move from Nasdaq, beg your pardon, from Dow Jones. Now let us check out Nasdaq because this is the high beta index, and we do not have, I mean, much momentum to talk about. I would say why I am saying this is because it looks like a lower high, lower low kind of pattern, which is not at all a good sign as of now, unless Nasdaq surpasses this particular line. So it's a mixed bag kind of thing. So let Nasdaq surpass and sustain above 18,000, 19,865. If you are looking for an upside till 19,865, it is a kind of high that Nasdaq may probably make, but that's where you're gonna hit the resistance. So you have to be very cautious in Nasdaq. So Dow Jones has a clear picture, but not Nasdaq. So if you want to be in Nasdaq, this is the range. This is the narrow range in between which Nasdaq is currently trading, and either you trade the range or wait for the expansion. It is up to you. So for Nasdaq, we have 19,547, which is our support, and 19,500 on the downside as far as the stop loss is concerned. So please do not go below these two specific levels as far as the lower end of the range is concerned. Similarly, we have 19,865 as far as the target or resistance is concerned. So stay within this range, or if it expand beyond 19,865 or more, then we can go for an upside, or if it falls below 19,500, then it will be a downside. So we have a mixed bag kind of numbers both from S&P 500, Dow Jones and Nasdaq. Obviously S&P 500 is more lean towards Nasdaq, and you have similar kind of pattern. So I mean, this is rather than a positive trend, it looks more like a mixed bag kind of numbers from, or mixed bag kind of trend from, you know, all these indices, all these three indices. Here we are for S&P 500, it is just hitting the resistance now. So we have two or three targets or resistance for S&P 500. So you have 6,000, you have 6,058, and you have 6,105. So uh, these three levels are your target, but at the same time they are your resistance levels as well. But the problem here is, or the way the this particular index shaped up clearly indicates that if S&P 500 continue to trade below 6,000 or lower, then it is definitely a downside which is going on, and you have to be very cautious about it, because technically, if S&P 500 continue to trade below 6,021, which it is right now, then in that case, the support level which we're gonna expect may push S&P 500 towards 5,850 of 860. So this is the range which is clearly active for the time being. So in between 5855 and 5831. So you have to be very cautious about it. So I mean, from positive to average to negative, we have three index with three different flavors. Generally it does not happen. I mean, I have never seen this kind of move where all the index are giving us a different scenario. Now it is up to your virtue and your preference which one you're gonna select over here. Let's talk about the reason behind that, which is the dollar index. Obviously, I mean, we cannot see anything, we cannot see uh, any loose momentum or any fatigue in dollar index, and dollar index is clearly moving higher with a very strong momentum. And I have been saying this thing for the last not only for the last couple of weeks or months, but for the years, last 1 or 2 years as well, that we have a very clear indication uh, that dollar index is moving higher. And even if I looking at the very narrow trend or very current range, this is what we can get. So when we are looking at the dollar index, it is not at all giving us any positive sign, and dollar index is moving higher. So if dollar index moves higher, where we right now have 108.9, which is our support and stop loss, you will see downside below this level. But dollar index is now moving towards or in between 110.7 and 111. So what dollar index suggests is an upside, and if dollar index swings higher, obviously it will have a negative impact on the equity market. So you have to be very cautious about what is happening in the equity market, and the kind of indications which is coming from dollar index clearly suggests that you have to wait and watch before you start acting on this. Okay, this is not at all a good sign, and I mean, obviously, stronger currency will have a major negative impact on the equity market. And if you are looking at the big trend, then we have a lot to look at, because I have talked about the small or the current very immediate range. But if you're looking at the big trend, then even 113 and 114 is not at all a big deal. It may retest even 120 as well. So that's where the problem lies. And I think this time, after let us discuss about, or let us also check the bond yield, what the bond yield is suggesting for the time being. Yes, we do have a slight bit of correction in US 10-year yield, but this is not a scenario where we can say that the yield is moving lower. I mean, we have some sort of correction, but that's it. Basically, US 10-year yield is moving in between these three lines, where we have our, for the timing, we have our stop loss at 4.53. But if it surpasses 4.73 once again, then it may retest 5 as well. So there is nothing called a fatigue or something as far as the conventional instruments are concerned, and they are the guiding force behind the equity market. These are the indicators which will tell us the next big move in the equity market, and they are all going strong. So if US yield is strong, if the currency is strong, then you have to be a little bit nimble on the equity market, and let the price react first before you started jumping onto it and make moves about what is about to happen. So you have to be very cautious about these kind of moves. So I would say better wait and watch. rather than jumped into the trend, unless you are very much sure about the index or the overall market. Specific stocks is a different thing, but when we are looking at the overall market, we have some very mixed signals, and I mean some risky indications as well. So you have to be cautious about that, and let the new president comes in. Uh, let us just listen to him, what he's about to say and what he's about to do, so that market will adjust themselves. I mean, market is bigger than everyone and everybody, so you have to listen to the market first before we started jumping onto it. So this is the end of the video. Thanks for watching.